All right, folks. My name's Eric Wilkinson, and this is Spotting the Trade. Thanks for joining us today. So I'm going in a little bit later than normal. I wanted to wait for some earnings trades that I thought I might be able to find or layer on here today, but it's really just not a whole lot going on with the economic data. One of the things, though, that we do have going on is the ISM services PMI came out this morning. It actually came in better than expected. We were kind of seeing some of these data points come in a little bit worse than expected. So good to see that that one came out better. Also, another thing that we saw there was that the non-farm payroll numbers coming in better. Folks are getting hired there. The Institute for Supply Management across the pond came in better than expected. Services PMI, Purchasing Managers Index. That's one of the most important economic data points I like to look at. And then finally, we wrap it up here in the United States with the crude oil inventories, and that was another build. Again, we're talking about crude oil, and I'm going to share my screen here in just a second, because one of the things we're talking about with this crude oil chart is we continue to see strength in crude oil, despite the fact that we're seeing continuation. The production isn't slowing down. We are still turning this around and turning it into gasoline, distillates, and everything else. But the fact of the matter is we just aren't seeing that demand. So one of the demand aspects is we see this build here in crude oil. That's why we're seeing that finally start to break. It's just a culmination of layers and layers of negative news for crude oil that's going to give us a little bit of a pullback here. I'm expecting us to see it pull back around that $65 a barrel mark. Most people are calling for $100 a barrel. That's why I created that straddle where we can do it for the pop or drop. My expectation is a pullback. Everybody else is calling for $100 a barrel. We're seeing $4 a gallon here in Arizona, which is really high. So a lot of those negative aspects of higher prices of gas going to get people to pull back on driving. Folks are starting to work from home. We're not seeing the demand coming out of the manufacturing sector as it pulls back a little bit. Polypropylene, plastics, that's where we're seeing that stuff come from. So a big pullback here is good for the overall market. I do not like to see inflation, especially when there is no demand following it, folks. And that's one of the worst things that we've been seeing going on with everything in the economy is we're seeing inflation, but that inflation isn't driven by buying power. We would rather see the consumer's buying power drive that inflation higher rather than just printing money. And the fact that I have more dollars to spend this month than I did last month is not a very good recipe for a good economy, because once that money is spent, it's out in the economy. But the fact is another all-time high here in the E-mini S&Ps. They really don't, or NASDAQ E-mini S&Ps as well. And even if we flip over to the Dow Jones Industrial Average, everybody having a heyday today. It is looking like the Fed is not going to be raising rates. They might talk about tapering, but for the most part, that, folks, is not going to happen by the end of this year. So something that we've been talking about, Las Vegas Sands, still not getting to my 41.61. That's the price I'm looking for there. Also, if I do that, then I'm looking at trying to add some 45 calls in Las Vegas Sands to cover that. Still working that. We still haven't covered this gap in the market that I'm looking for. That cover of that gap is lining up with that 41.61. I'm giving up a little bit of edge just to make sure that I get filled on that cover of the gap. And then I've added some money to my premiums on those 45. So I'm trying to sell those October 45 calls for around 60 cents. All right. So another move higher incrementally, I should be able to get those off. And then the other thing that we added to the portfolio, in this trade, we have extremely low volatility, and the market was looking like a bit of a top yesterday. So I added some puts in there, and it is not looking too great there as of right now, because I put that trade on this morning and was looking a little bit better for it earlier on today. Sorry, everything's moving a little bit slow here, but I did add some puts based on this topping pattern right there in and around the point of control. Well, when we get those candles on a topping pattern, I'm a little bit more aggressive. I don't always wait for that confirmation on that trade. And this was one of those cases where I jumped in a little bit early, did not wait for that confirmation. So in that, I got on the November long the 38 puts in there for 34 cents. All right, so working order, obviously with this move higher, it is not helping me out. And because I ran a little bit long today, I didn't get a chance to put on any earnings trades. So keep my eye out for those, and we'll talk about those as soon as I find opportunities in and around that type of situation. I may be a little bit past that at this point. All right, that's all I got for you folks. Other than if you can't take that, take it easy.